Tonight on the Kudlow Report, as Larry Kudlow would say, it's more than just a summer rally. It's the new bull market. Goldilocks has the bears on the run, and stocks are soaring to their best July in 20 years. Look at her go. Free market capitalism is not dead. In just a moment, we're going to dive in with some of the best big picture minds in stocks and the economy. Plus, we're going to go inside the hottest recovery sectors: financials, technology, energy, and commodities. 109%. You're reading that right, since the March bottom. We have got the top investment analysts from every corner of this rally. And will the August recess be bullish for stocks? Will Congress and Obama's tax and spend anti-business agenda kill the rally when they come back? We'll debate. Fasten your seatbelts. The Kudlow Report starts right now. Good evening, I'm Michelle Caruso Cabrera, and welcome to the Kudlow Report. Larry Kudlow has the night off, but don't you worry, even in Larry's absence, we still believe free market capitalism is the best path through prosperity. So on tonight's show, it's more than a summer rally. Larry says it's a new bull market. U.S. markets hitting the highest levels of 2009, with the Dow turning in the best July in 20 years, 12 years for the S&P and the NASDAQ. The bears continue to get slammed, and it's the new bull market. But how long does it last? Is it too late to get in on the recovery rally? Let's dive in with our market gurus. We have CNBC contributors Jerry Bowyer, Don Luskin, and Steve Grasso, plus Peter Schiff, author of The Little Book of Bull Moves in Bear Markets, and Peter Marisi, University of Maryland business professor. And Peter, I'm going to start with you. It says here that you're bullish. Is that because we've once again gotten data that indicate to many the recession has ended?
Well, the recession
hasn't ended. If anything, the depression is just getting underway.
I was talking to Peter Marisi, sweetie.
Oh, I'm sorry.
Well, the two Peters have opposite views. I think the recession is coming to an end. The fourth quarter is going to be a good quarter, and we got a lot more room to grow in this market.
The other Peter.
Well, you know, first of all, it's not a new bull market. It's the same bear market that's been going on since 2000. But, you know, what's happening in the U.S. is a sideshow. The main event is overseas. The markets are on fire there, particularly in Asia. I mean, the U.S. market looks like it's standing still.
Why are you skeptical of this?
Well, look, I know that the underlying fundamentals of our economy have worsened. They haven't improved. We have more debt now than when the recession began.
So the GDP coming off only 1% compared to the two previous quarters that were even more horrendous. The fact that continuing claims peaked how many months ago? None of that is good enough for you.
But at what cost? Look at how much debt we had to incur to get that quarter. We're going to pay for this. It's going to come back and bite us.
Hold on. One of the big things going on here is that American companies have trimmed themselves down, gotten much more efficient. Yes, there's a big market in Asia, and they're going to make money there.
Look at that inventory number.
Yeah, but the U.S. government is not trimming itself down.
Yeah, but the U.S. government has hardly spent very much so far. We haven't had much stimulus. It's going to be American companies selling abroad.
Well, they're issuing all this debt. What are they doing with the money? Meanwhile, there's a lot of companies that are getting propped up with bailout money. We'd be much better off to let them fail and free up that capital.
You're on the floor every day. What are your clients doing when it comes to fund flows? Do you see the money? Do you feel that this is still a bullish market?
I feel like my clients were skeptical 100 points ago in the S&P. Now they're getting more bullish, and that money has to come in off the sidelines. They're getting pressured around that 1,000 level in the S&P.
Don Luskin.
Look, I hate to disagree with my new best friend forever, Peter Schiff, but, you know, this is not like the same old bear market since 2000. This is the same old trading range since 2000. This feels very much to me like the Johnson-Nixon years, where for 16 years from about 66 to 82 until Ronald Reagan came in and cleaned things up, we were in a trading range for 16 years in the Dow, and it was a lot worse than a trading range. It was a bear market if you adjusted it for inflation. So it turns out that we've now been for a long time in the Bush-Obama years. We just didn't know it until we were 9 years in. You look back, nothing's happened with stocks. Inflation is back on the rise. But that doesn't mean you can't have lots of bull markets and lots of bear markets. It's a gigantic trading range. So let's get our definitions straight.
Sure, but meanwhile, as the dollar loses value, you know, we hit a new low for the year on the dollar. You know, the real value of U.S. stocks is going down.
Not on a trade basis. Versus what currency? That's just not true, Peter.
Well, no, the dollar got clobbered against every currency today, but if you look at the dollar index,
that doesn't mean it made a new low.
Yeah,
It just didn't. It just didn't. On a trade-weighted basis, the dollar's what? 10% off its lows?
It's a new low for the year. The dollar is headed lower.
For Peter, only if Ron Paul is president do we get to declare it a bull market. Otherwise, unless we're on the gold standard and all that other stuff, then every bull market will be illusory.
I mean, I love Ron Paul as much as the next guy, but you can't define bull market that way.
No perfect
Jerry Bowyer,
exchange rate.
finish your thought.
All right, the Dow Jones went up because profits have improved. Profits have improved because American business is smart and they cut their costs. And that was in the midst of an extremely deep recession. Now, off of the baseline of those incredibly low inventory adjustments, we're very likely to get positive GDP in the third and fourth quarter. So now the top line goes up. So that is almost a guaranteed recipe for increased profits. It's not a boom, but it's a bull, and it's real.
And, Jerry, the only problem is that we're seeing on the floor is that we can trade to the higher end of the trading range, but the problem is once all these anti-growth policies come through, what happens to profits then? What happens to the taxpayers?
That's for real.
And what happens when interest rates start to go up, which is going to happen?
Congress is out for a blessed month.
Right, that's
very
right.
bullish. And then we've all had time to read the bad legislation, so we have a better chance to stop them when they come back.
But do I have a sense all five of you seem to think that if we see many of these